Welcome to TradingLounge and the US indices, but I'd like to start with the European market because it's the European markets that are leading lower, and in the big account we have the same count. So for the SP 500 we have wave 3, wave 4 and wave 5 of intermediate wave 3, the same as the DAX here, but the DAX has moved down quite swiftly here, and we're looking for wave 4 of the wave 4 of 1 lesser degree kind of target here. And if I go to the hourly chart here, you can see that the move down here is really quite nice here, and we're looking for a corrective move and then a short trade to the downside here. When we look at the SP 500 though, it hasn't moved down like the European markets have. So I still think we need a little bit of caution until we get a bit more evidence. But in the bigger picture here, we've got wave 1 and 2 here. Well, from wave 4 here, primary degree, we're going up to wave 5 of primary degree here. And we're looking at wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here. So we're looking for that top in here and wave 4 to pull back across the level here. So this is a medium level here, so normally we would see the classic trading levels pattern as the arrival, the reaction, the first high above the level, and then the A, the B and the C correction, and then finding support here and moving off from that space there. So on the daily chart here from the weekly, you can see that it hasn't really moved down a lot, and it hasn't really given a clear 5-wave structure to the downside here either. So just on the hourly chart here, I've recounted this here from this wave 4 here to this wave 5 here with the best fit, in terms of looking at this as wave 1 and 2 here, and then 5 little waves up for 1 and 2 and 3 and 4 and 5 to the third wave, fourth wave here, and then 1 and 2 and 3 and 4 and 5 here. But I'm not happy with this little structure here, because it can be counted in 3 waves. So this whole area here is not the same as the DAX. When we're looking at the DAX had a really nice 5-wave structure to the downside. So in this case here, I mean, I could call this here as well as an A wave here, a B wave here, and a C wave here as a corrective move here, and then we would just simply look to take the top out here in this case here. So the other point here that I need to make too is that when we spoke last time, to be short, we want this number here to be a retested resistance, not just a spike through here and come back up like it's done here, but actually to retest it. So that would be, if I can just, well, let me just organize myself here a little bit. So it would be like a move down through here, probably a bounce off here, but then move through here and then come back and fail that retest here, and then move down from that point. So that's why once you've got that point here, then I've got that here. So if that came back up here, then we would be short at that point. So that retest is important. So that's still going to be the case to move forward in terms of shorting here as well. When obviously the stocks drive this, and we can look to either the biggest stocks or the most profitable stocks. And if we look at, I was just looking at Berkshire Hathaway here. So this is a daily chart here for them. I haven't labeled it, but basically from January 2016 here, we've got wave 1 here with 5 waves in it. And then wave 2 coming back, and then we've got all of wave 3 up here. So wave 3 is 5 waves here for 1 and 2, and then 1 and 2 and 3 and 4 for 5 for the third, the fourth and the fifth here. So we've got 1 and 2 and the third wave up here, and then we've got the fourth wave back, and then we've got wave 1 to here, which is 1, 2, 3, 4, 5 for 1, back for 2, all of the third wave up here, the fourth wave, and then the fifth wave up here. But even this market here doesn't have 5 waves down here just yet. It's only got 3 waves down. So if we'll just keep this, keep an eye on this here. If we can see this, because I can see this is 1 and 2 here, and third wave here, and a fourth, this could be the fourth wave here, then the fifth wave coming down. So if we do get the 5 waves down, then we can look at, I'm just taking this as a general stock thing, then we can look for short trades here. So even on our CFD trades here, I will start winding up a lot of the I haven't really put any long trades out for a little while because of the turn here, and then I also need to confirm the turn down here as well. So in confirming this turn down here, just in stocks and the stock market, we would need to see 5 waves coming down here, and then the turn back up, and then we can start shorting down this side here. So this particular market here, if I put, this is the same market. This is just an hourly chart for Berkshire. So in this case here, if I take this as wave 1 and 2 here, and then 3 here, and then 4 here, then I can look at all of this as being an extension here in 5 waves in terms of 1 and 2 and 3 and 4 and 5 here. But this is still not giving me 5 waves down here. So I need to, I'm just taking a bit of liberty of 5 waves being in here, and then 1 and 2 and 3 and 4 and 5 to here for the third wave. I'll still need to see the fourth wave here, and then the fifth wave here. I still need to see 5 waves down here for this particular market, then a corrective wave up, and then we can look to short if we get the 5 waves down here. But at this stage, we've only, even to this point here, we've only got 3 waves down, so I can't call it a bearish market like I can do with the DAX. So yeah, a little bit of caution is still sort of required here. So in this market here, I could count this as an A wave here, an A and a B and a C for the B wave here, and a C wave here. And I could also count it bearish as well. I could also count this here as wave 1 here and wave 2 here, and then moving down here further as well. So in that case, it probably wouldn't break the trend line here of coming down. It would probably see this move up here as an A wave, a B wave, and a C wave up to the trend line here, meeting all those opening closes through here, and then fail from that point and move down. And then we could look at the bear market being bearish from that point, because when I look at I normally go to the NASDAQ, but I've also been going to Amazon as well, if I can find that in my list here. Right, so with Amazon here, the last time we spoke about this is that we had wave 3 here and wave 4 here, because we got this right from the low here, and I was looking at this as wave 3 and wave 4 here, and then it was possible that, as I mentioned before, I've got this wave 5 here, which is obviously the blue wave 5. So I could have blue wave 5 here, because we've got the 5 waves up here. But I just wasn't, it just, I don't know, there was a couple of things. One of the main points is that the move down here was in 3 waves. So that means we make a new high above here. So the idea was we would short below here to get on, or otherwise look to go long on either this one here, or for the safer trade, this one up here. And yeah, this structure here is not finished just yet. So obviously Amazon is one of the biggies in the francs and the NASDAQ. So this can push higher through here. So what we can do now with this, just by the by, if you're long, that's fine. We can move this up, and we can put this under here now, under this low here. I'll just squash that in there. So if that gets breached now, we can either stop you out and go short from that point there. So yeah, look, I don't have the evidence that we've got 5 waves down in stock yet, and I've got the Amazon moving to the upside here. So I just need to be really cautious about, I'm trying to get the turn here, but I need to do the turn with evidence in Elliott terms. Or at least trading level terms. And trading level terms is that the 2572 here has got to become the retested resistance. Okay, that's all I can really offer at this stage. If there's yeah, I'll just have to leave it at that at this stage. Alrighty. Cheers.